are. And let's get you an interesting conversation. Tata Consumer Products is under pressure despite an inline set of Q1 numbers. Now, the India business revenue growth came in quite good. It was at 15.5%, and this has outperformed what we saw in terms of the international business performance. So that's our growth of 7% versus expectations of a 10 to 12% kind of growth. So Mangalam caught up with Sunil, who's MD and CEO, to discuss the quarter gone by and what they really expect going forward. So here's a slice of that chat.
Coming specifically to international, Mangalam, I think there are 3-4 things out here. We have taken a lot of pricing in the international markets in line with the inflation that we saw, and we've done structural changes. Now, the good part as a result of that is gross margins in most of the businesses are back to where they were, bar, I would say, US coffee, where coffee prices are still on the uptick, but whether it is UK, Canada, etc., gross margins firmly back on track, number one. Volume has therefore been an issue because overall industry, for example, is under pressure. Canada overall, actually, industry has declined. We've sort of maintained our market shares out there. UK market shares on the upswing, given our relaunches with the new packaging of Tetley, new blend of Tetley, etc. So that is on a strong footing. More importantly, we had said we are making structural cost corrections, primarily in the UK. And UK has swung by nearly 900 bips on the EBIT margin versus last year, given the cost corrections that we made. Now, I would say gross margin wise, now broadly steady. Now, the focus in the international markets has to be A, get growth in the businesses that we are in, primarily tea and coffee, tea in the UK, coffee in the US. Other than that, our portfolio expansion has to start off. Incidentally, we will be launching the UK variant of Soulful, which is under the brand name Joyful, shortly in the month of August in Tesco. We are starting to expand our ready-to-eat portfolio in the US. So leveraging the same cost, expanding portfolio is going to be the key.
So then with the international business on track, the India business doing well, relatively well as well, what would you say would be your target for FY24 in terms of revenues and margins? Should we see mid-teens for the entire year?
Mangalam, we've always maintained saying we will continue to drive double-digit growth. We will continue to drive total bottom line ahead of the margins, and that remains the focus.
Right. You lost some market share in salt and tea in India. Is there a reason for concern, or that's just temporary? Going forward, you have made those changes now.
So I'll first come to salt. Salt, we lost about 20 bips of share on a MAT basis. But if you dissect the salt pieces, remember we had taken close to a 33% price increase. And our volume continues to be, this quarter we've grown 5% versus same quarter last year. So that remains to be on a strong trajectory. We had taken aggressive pricing when salt prices had gone up. Tata Salt franchise itself has gained 10 bips, but we've lost a little bit of share at the bottom of the portfolio, which is the low price. So it's not too worrying. As salt prices stabilize, as our execution engine kicks in, that will come back. On tea per se, again, on a moving annual total, there has been a 50 bip drop in volume market share. But again, if you compare to the same quarter last year, it's starting to turn. And given the fact that tea prices have now normalized, we are seeing the value-volume equation in tea starting to turn, value starting to come back now. I would remain broadly confident that we will get back this share over the next couple of quarters.
You said last year that growth businesses would be 20% of your business for the full year. At the first quarter itself, you've marked that 20%. So is there a chance that you'll outperform? And secondly, on NourishCo, despite adverse weather conditions, you've gone ahead and done almost 300 crores this quarter. So is there a chance that you'll cross that 1,000 crore guidance that you've given for the entire year as well?
So, yeah, I would say that 20% growth is a good number, but you have to take it in context. I would like to see more growth in my core business. So the denominator probably changes. We will continue firing on all cylinders in the growth businesses, and we remain confident. Soulful, for example, we've had several new launches, and as we speak, there is a new launch of Choco Sticks going out. So remain extremely confident of growth businesses. NourishCo itself, it's a seasonal business. So 300 crores for the first quarter was our target to hit 1,000 for the full year. We are on track, and we do expect to hit 1,000 for the full year.
This I'm quoting from the annual general meeting where the chairman had said that you're looking at new categories, looking at acquisitions in those categories and looking to accelerate your journey towards becoming a full-fledged FMCG company. What does a full-fledged FMCG company mean, and what are the gaps where you're looking at acquisitions for?
Mangalam, I would say full-fledged FMCG company means beyond food and beverages. Right now, we are focused on food and beverages. I would say other FMCG categories like personal care, home care, etc. Right now, I would say in the short term, I would say broadly medium term, we are still focused. We've still got a lot of runway in the food and beverage business itself. We remain focused on growing both organically and inorganically.
You're looking at home care, personal care, of course, not in the medium term, but that's quite a headline. Tata's coming back into the home care and personal care space. Anything on the inorganic front here in categories that pique your interest?
So Mangalam, like I mentioned, beyond food and beverages, slightly way off.
Okay.
But on the food and beverage piece itself, you have to remember a large portion of my business is salt and tea, which is exposed to commodity inflation. So we will look at value-added categories in the food and beverage space.
With regards to distribution, something that was very interesting is that you initiated split route for salesmen in the 1 million plus population towns. What exactly does that do to your overall growth?
The 1 million plus split routes will give us an assortment increase. And below that, it will give us a distribution expansion and numeric reach increase.
And what are you targeting in terms of A&P this year, ads and promotions?
So we will be increasing A&P. Last year, we had sort of held it tight as inflation had hit us, and we were trying to manage between margin and costs at the same time. But now that we're seeing commodities beginning to be benign, I think now the focus has to be volume growth, and volume growth will be driven by distribution expansion and innovation, and most importantly, brand building firepower.
So how much more in terms of percentage of sales will you be allocating?
We will be increasing it from where we are. There is a target number that we want to reach over the next 3 years to be on par with the rest of the industry. We are not. We are behind. But we will continue to up it every year.
All right, take that point. Thank you, Mr. D'Souza. Always a pleasure speaking with you.
Okay, that's Tata Consumer. Their India business has done exceptionally well this time around. Let's take a quick break on